Hello and welcome back to Logan Shares. On this channel, I'm sharing things that I have done, currently do, and plan to do in order to retire very rich and very early. These are things like building up your savings account, building up your credit score, investing in retirement accounts, investing in the stock market, and much more. If you want to see more tips and tricks from me, go ahead and like this video and subscribe and leave a comment down below for what you want to see in my next videos. And in this video, I'm going to teach you guys how to take advantage of your school loans. Let's get started. Today I'm coming to you from my brand new home office, from my spare bedroom, and my brand new desk, which I will show you in 3, 2, 1. Guys, this is my guest bedroom. I took the air mattress up that my guests were sleeping on, and this is the dresser. There are things on it that I need to hang up and other decorative type things. There's my little gaming chair and a bookshelf, my spare TV and a printer, random things, but this is the highlight, my new office desk area. This desk I ordered from Amazon. It came in 2 days because I have Prime, and it's very large. It's the 55-inch. I've been sitting at it for the past 4 hours doing video ideas and things. I love it already. Here's my chair with my little blankie. Oscar is sitting in the chair right now. Hey Oscar, are you enjoying your time? Because I am. The desk actually came with this little cubby, and it's kind of like a little shelf for storage. I have my camera and microphone equipment in here, my laptop case with all the other things like my hard drive, and it is amazing. Also, what came with the desk was a little hook, so you can hang anything on it like headphones or your charger or anything else. The reason I decided to get a new desk and make a new home office is that I needed a place to sit down and do my work. If I'm really serious about making these videos and putting content out to you guys, I can't get distracted by watching TV. I needed to have a place to come and sit down and focus. And I know a lot of people may be working from home, doing online schoolwork, or just want to sit down and start reading or journaling. So if you are one of these people that need a place to sit down and focus, getting a desk is a really good start. For those of you who would like, I have a link in the description below for my desk. I got the largest size, but there are multiple smaller options for cheaper prices. So before we get into how to take advantage of your school loans, I want to tell you guys how the loans work. So of course, what you may already know is that there's a principal balance. This is the amount that you borrow, and you can borrow different amounts over different years. Also, you probably already know that all types of loans have interest rates. Interest rates can have a very wide range. For instance, one of the average interest rates for school loans is 4.69%. These interest rates tell you how much more you're going to pay on top of the amount that you borrowed. To show you how interest works, let's take a loan amount of $20,000. We'll use the average interest rate of 4.69, and a standard repayment plan is for 10 years. Over the 10 years, your $20,000 loan is gaining interest, meaning that at the end of the 10 years, instead of paying back what you borrowed, which is $20,000, you will have paid back what you borrowed plus the interest, which totals $25,104. This means basically your lender is charging you $5,104 to borrow the $20,000. Some interest rates compound yearly, some do monthly, but school loans compound daily, which means you would take the interest rate of 4.69 and divide it by 365 for every day of the year. And since it's growing every day, the interest goes off of the new amount per day. This means that every day your loan is growing 0.00013%. So now that we know about the principal of the school loan, what the interest does to that principal, and the type of daily compound interest that's applied to your school loans, I'm going to share with you ways to take advantage of your school loans. So step 1 is how to pay off your loans faster. For this, all you need to do is pay more than your monthly minimum. Let's do some math. Let's say that your student loan is $20,000. Your interest rate is 4.7%, and the standard repayment plan is 10 years long. This means that the total amount you'll pay, including interest, is $25,059, meaning every month you'll have to pay $209. Now, let's see what would happen if you added $50 a month to your bill. The principal balance of your loan is still $20,000. Your interest rate is still 4.7%, but instead of taking 10 years to pay it off, you pay it off in only 8 years, which makes the new total paid, including interest, $23,883. This means over those 2 years, you're saving $1,176. Now, let's see what would happen if you paid $100 extra a month instead of only $50 a month. The principal of your loan is still $20,000. The interest rate is still 4.7%, but this time you're paying $309 a month. This means that you will pay off your loan in 7 years and save a total of $1,946. Jesus Christ. Isn't that crazy? You pay a little extra a month and it saves you so much money in the long term. And that means that's a monthly payment that you'll get to cross off your list, and you'll be saving that money instead of spending it. Step 2 in taking advantage of your school loans is never advance the due date. If you've ever made a payment on your school loans online, my website is Ed Financial, you'll see that there's a little checkbox under the amount you're paying that says do not advance due date. This means that as you're paying the minimum of the bill per month plus the extra, you're paying money up front to cover future bills. It says that if your bill is $50 and you pay $100, you just paid for this month and next month. If you click don't advance the due date, you won't have a bill due next month because you already paid for it. This means that you can pay bigger sums of money at a time and push your next due date way into the future. Also, if you continue to pay more than your monthly bill, your monthly bills will start getting lower. Here's an example for you. Like I said earlier, one of my school loans was $3,500 and the interest rate is 4.29%. So in September of last year, I paid $1,000. October, I paid $1,500. December, I paid $500. January, I paid $250 more. In March, I paid $100. And literally today, I paid $25 just to show you guys what happens. The accrued interest on this loan right now is only 16 cents. And my next due date for this loan is February 28th of 2024. By paying these bigger lump sums and not advancing the due date, I don't have to pay anything on this loan for the next 4 years. What about interest, you say? Since I've already paid a lot on this loan, the balance right now is only $158.29. The interest rate is 4.29%, meaning that at the end of the year, the interest will only grow $6.94. As I said in my video on building your credit score, having more accounts open on your credit report helps you build your credit. So I am willing to have this loan on my credit report for the next 4 years for only $7 extra a year. And think, if I pay $1 a month on this loan, the balances on my credit report will get lower, which means my credit score will get higher. Now, if you saw my other video on how to start saving $700 extra a month, you can follow those tips and put that extra $700, maybe even just an extra $100 towards your school loans. And remember, closing any type of account can hurt your credit score, so you can keep this balance really low, only let it grow $7 a year like mine, and use the loan to your advantage to build your credit score. Like I said, if you guys want to keep seeing tips and tricks from me, make sure you like this video, subscribe, and comment down below about what you learned. Also, please leave comments down below about what you want to see in my next videos. Again, thanks for watching Logan Shares, and I'll see you next Wednesday.